Good morning, everybody. It's Chris from Student Education with the 4 Majors Analysis update for the 16th of May 2011. Hi guys, I hope you had a fantastic weekend. So we're looking at the CTC on our 6-screen time frame, starting with the Euros. Let's have a look at the daily. Okay, so we can see an extension to the downside. Nice momentum. It's topped out. We all know it topped out quite recently. Highs just roughly under the 1400, 8500 mark, and you see it fall to the downside, broke through the 14500 mark barrier quite easily. Then the 143,500 mark, then attempted the 142,500 mark, and now if everything goes according to plan, we should see something around the 1400. Asian market trading has seen little change overnight. Not much news out today for this pair. We've got CPR year-on-year figures and expecting no change there, 2.8%. And then got Euro core CPR year-on-year figures, expecting a slight rise from 1.3%, sorry, to 1.5%. So not a huge difference, but if that was the case, and we get a greater figure, then it could be good. So this particular news event clocks the change of price of goods and services purchased by consumers, excluding food, energy, alcohol, and tobacco. So yeah, it's just a mild impact news event, and should be one just to watch anyway. We've come from the figure for April was 1.0, the forecast was 1.1, it came at 1.3. So we saw that drive. 0.2% up is fairly good. So if we see another 0.5% increase today, it just bode well for that pair. So ideally, we're still negative. So, I mean, the next port of call in this trend, because the CCC is extended to the downside. The only difference is we don't have the red on either side, but you can see the bearish momentum, and you'll probably see those setups on our 4-hour, hourly, 30-minute, etc. We're looking at 1400 as a possible target now. Let's have a look at the intraday charts. You can see the extension to the downside on this pair, trading below all the moving averages on a 4-hour. So we can see the breakouts at 1450. Just put these in as you go along. You can see the breakouts, pullbacks, and continuations along the way. Definite support and resistance pair, and now we have a slight one as we speak at 1405. There's also a bigger one at 1400. So there, it's entirely down to preference. There's a slight, there's another one just here at the 1500 mark where we've had support, some resistance, further resistance, support, and just recently some more support. So you can see that there are definite areas you can get really carried away, but you can see the CTC is still seen to the downside, which is the most important one at the moment now, and we're coming up to a potential long-term support area at the 1400 mark. It's also a round figure, so psychologically wise, that'll be something that a lot of people will be looking at. So 1400, just put it in. You know that there's slight hesitation at 1405, and you can see the price action now. Even though we're moving to the downside, we seem to be going sideways. You can see the momentum shift. It's not as proliferant. Down moves. It's still down. We've had a bit of ups, and we're moving down, but it's almost consolidating. It's pretty much going more sideways and down, and so it's something to watch. Be aware of. You could be just seeing a consolidation taking place, and the most important thing is we're getting lower swings. So very, very important. Swing is lower than that, which is one power over that, which is lower than that, which is lower than that. So CTC is still lower, and we're looking at 1400. We could see hesitation now creeping in because price is getting closer to that range. So be aware of it. Let's see what the CPI results, year-on-year figures, come out, and see if they can do anything for this pair. You can see 30-minute well extended. You can see that consolidation band now taking place around. Seeing hesitation, a little breakout to the downside. So what you could do if you wanted to be trading this is obviously see a break higher than 1200. That's a unique one. You can see the lower swing, so ideally a break above that would be brilliant, or a break lower than the 1405, but be aware that 1400 is the long-term support area. So not much movement in terms of pips. You might be able to squeeze out enough to want to trade, but there again, it could consolidate in that breakout, so it could be very, very messy. That's entirely down to your preference. Just notice that we are now trading against the 50-period moving average, and we're also on a 5-minute making our way down to the 200. So we could see price just moving around in this channel or consolidation pattern until we could see price breakout and test the 1412 mark, which I mentioned is that you have to be trading above, but we have the all-important 200-period moving average, which has been acting as or has been trading below this moving average for some time. So be aware, factor that in, and you can see that price is trading well thereabouts with the trend on a 5-minute. So look for possible breakouts when the European session opens this morning. It's important to remember that there could be consolidation going on this pair. If the CPI results do come out favorably, then we could definitely see the potential pullback occurring. 1400 isn't that far away in terms of where we're trading now in the aspect of things. So just be aware of that. You can see that the momentum on this particular pair is trading lower, and you can see there's a definite trend to the downside. However, we are going to be at a crossroads soon, so definitely need a bearish engulfing to definitely confirm downside movement. Otherwise, we could expect a consolidation to take place, and we could see a bit of upside movement. The next pair we're looking at is the UK sterling against US dollar, or cable, on our CTC strategy. Here again, you can see price is pretty much moving downside after this exhaustion candle here. We're closed just below a prior resistance level and support, and we just looked for further downside movement, and sure enough, we saw that taking place. I looked at the possible 16,2500 as a possible target after that candle, because we've seen a price support in the past, and we've now broken through that quite significantly, and we're trading lower. So where to for this pair? Well, we've got a bit of hesitation here as we speak, where price is trading at the moment. Ideally, the long-term target for this pair would be 1600, because we've seen a lot of support and resistance at this level in the past. So 1600 would be the ultimate goal for this if the pair continues to rally to the downside and closes lower than the prior candle, Friday's candle, here at around 1615. So see price moving further down today and closing lower than the 1.61500 mark, then we could definitely be looking at potential further downside movements to at least 1600. You notice that on this time frame you can see this major consolidation here, and this wick, a lot of momentum to the downside, has created a swing low, and you can see price direction is dictated by this very strong sell. CTC, however, is still blue. Remember that we're still trading above the institutional moving average. We've broken through the two smaller moving averages, but CTC is still blue. So if I drew a trend line, then we're looking roughly around the 1600 as a potential bounce or trend bounce for this pair. So intraday we're going to get opportunities for for shorting, but if you're trading long term, this could be just a pullback in that long term scheme of things. So look at a 4 hour, for example, you can see definite CTC going red, giving us a clear indication that we should be looking for shorting opportunities for this pair. And just put in 1600 because that's the all-time low, or the ultimate price support and resistance that we should be looking at. Along the way, you've seen consolidation, resistance, support along bands. There are some definite ones, some clear ones, and some clear breakouts. 1625 was the last support and resistance level on a 4 hour. You can see the clear breakout. We could see consolidation now after this breakout before we see a continuation to the downside. Lower swings are still in play, and as long as this pair can stay lower than 16,2500 on a 4 time frame and create another swing low, then we should be looking for an opportunity set up to the downside for further extensions. 1610 could be a potential target to start with. Next up is the US dollar against Swiss franc on our CTC strategy. Let's have a look at the daily time frame. You'll notice the US dollar has gained a lot of strength in the past couple of weeks, and we're now heading back up to the 0.900 mark, which happened to be a prior support and resistance area in the past. So quite a significant area of that. And if we can see price trading higher than the prior Friday candle at 0.8945 and closing above that level, then we could definitely see a potential for that. Slight hesitation at a smaller price support and resistance at the 0.8916 mark. Notice that we had swing highs in this as price moved to the upside, so we do have trend direction, but be aware that we're now going to be testing 0.900 and we could see potential for consolidation or even a pullback to occur. So we might see price moving to the upside to start with, but then we could see consolidation or even a candle like this, for example. So we've seen price pull back, trade higher than a previous support area in the past. So you can see this was price support, trading against the underside of it, and then pulling right out. And then during the first part of the trade, we saw the US dollar gain a lot of strength against Swiss franc, but as the day progressed and during the latter part of the US session, we've seen price pull all the way back again and closed lower. So we could see an exhaustion wick forming, possibly, whether it's today or tomorrow, but anywhere around this, and we could see price fall back. But if price can at least rally and close above 0.900 quite significantly, and a similar candle to the upside would definitely confirm that there's more momentum for the US dollar against the Swiss franc, and we could see potentially further upside movement long term. So be aware of that. CTC is negative long term, but if we could break above 900, we'll definitely confirm a definite change in market sentiment, because we are now trading not over the break of a previous trend to the downside on intermediate, but we've also broken up a price swing. So we almost have like a potential head and shoulders. Okay, so intraday, we should be seeing that extension to the upside quite nicely on a 4 hour. You can see that. Bottom out. That's the thing you got to watch out when you're trading these time frames, is look at trend direction. You can see nice extensions to the downside, moving averages acting as resistance for this pair, and then we have a bullish engulfing pattern. So negative, then bang, a nice juicy, huge drive up. And that started the trend to the upside. We wanted obviously a break above the trend and obviously above the 50 period moving average. We got that, and then we had a consolidation and then an equal drive to the upside. And then what we're doing now is we're seeing higher swings. And as long as price can continue to swing higher, and all we want for it now is for it to break above the 900 mark. That is the 900, so we put that in, so we know that our target is there, and then we work out, okay, great. So during the Asian session, we've had it pretty much plateau. So what we want is a definite break of that consolidation. So it could pull back all the way down to at least the 890 mark consolidation wise, because the 200 period moving average is there. And if I could draw a straight line, it would be fantastic. Just going to use this. Sorry, guys. So prior resistance will become new support on our upswing, and as long as it can maintain that, then we could see potential for upside movement. A break below the 0.8900 is obviously breaking a prior high and the 200, and we could see definite consolidation taking place, and we could see price revert to the downside. So look, budget time for this pair, see if we do get a bounce at 0.890, and if we do, then look for a break above the 1895 for a reattempt of 900. Failure to do so, then we should be looking for opportunities to the downside. So you can see that band trading sideways, needs to be trading higher than that. We said that the 890 is a pullback area, and that's a prior resistance. So this part over here needs to be the intraday support. If it breaks and closes lower than that, then obviously there is no support and it's no confirmation in this extension, and we could see just price reverting to the downside, and we could see anything where we could see price going as low as, to start with, 88.50 and then right down to the 88.05 to start with on this time frame. So be aware of that. Last pair of the day is the US dollar against Japanese yen. Let's have a look at the daily time frame. Here again we can see the US dollar has gained a bit of strength over the past couple of days, and we looked at 800 or 80 being a support area for this pair, and we saw the US dollar gain strength since. However, in the past couple of days we've seen price fail at a level. What are we looking at here? We're looking at 81.057, so a bit of resistance at 81.57 on its way up, still trading below the moving average. Needs to be getting above that. Obviously you can see this intermediate swing downside has been broken, and hopefully we've seen price pull back now, but what we want to do is to see a swing high. So we need to see a bullish engulfing pattern here on the with the US dollar gaining further strength against the against the Japanese yen, and by doing that we'll be forming a new swing high. If that was the case, just it would look like that. So I'm just going to do a dotted line. That would be the line. So I'm just going to draw that in, because we don't know we're going to get another up candle here. We might get a bearish candle. So very, very important to be aware of that. We don't want to be trading. We don't want to be, how would you say it, trying to second guess the market. So ideally, if we want to see further extensions to the upside, what we would need to see on a daily is a bullish engulfing here to confirm that this is the new trend. Because if we had a low, then we had slight consolidation, then bang. So that was a swing. We get another one here, would just definitely confirm that we got a further extension. However, we have a major long-term resistance level at 81.50. So, and that's not too far off either. So be aware of that. It could be very consolidating today. We might have a bit of movement either side, but it could be stagnated. CTC is still negative. We could see that price is pretty much going sideways. We had a bit of intervention, but that didn't kind of stack up, and we're back now trading around lows that we saw last year, end of last year. So be aware of that. So intraday, you can see this price is pretty much going sideways. So 4-hour chart looking very iffy. The one thing to notice is the US dollar still has been gaining strength. So we get higher swings. Even though we're going sideways, we're still getting that higher swing. However, we need to be trading above the 81.50 to be considered bullish long term. That's not going to happen until we see price really challenging that level. Ideally, we want to be trading quite bullish, so we want to see a nice breakout. Until such times as it's trading below the 81.50, we should still be looking at negativity for this pair. So consideration range for the time being. Look for potential. Cables go. The US dollar has to do quite a lot today to give us. All we're looking for today on this particular pair is the US dollar going to close quite favorably to the upside today, and if we do so, then we're going to see a swing high to the upside for this pair and a challenge of the 8150. We do need to be trading above 8150. Otherwise, what we're doing is we're just going to see price consolidating 8150 again and finding another resistance level, and we're going to see price revert to the downside. So if we do get upside movement today, just be aware that 8150 is going to be a ceiling level, because it is a very strong support and resistance, price support and resistance on a daily time frame. You look at that, you look at the weekly time frame, same thing. So factor that into your trading today, guys. Okay, I hope you have a fantastic Monday. I hope you have a fantastic week. I hope you have a great start to the week. Remember just to keep all your trading rules very simple. Look at support and resistance, larger time frames, and from there govern what it is that you want to see from price. So if you've been trading negative for a long period of time, then obviously what we want to do is we don't want to be trading against the trend, we want to be trading with the trend. So if it means you're sitting on your hands for a number of hours and stuff like that and giving price potential pips back to the market until we get that, like in this case here for USD Japanese yen, we want to see. So be aware for us to be seeing definite potential for us to be looking at trends or strong trends. US dollar needs to be trading higher than 8150 against the yen. Until such times as doing that, then we're not going to be getting a true reflection of what price is doing, because it's seeing just a consolidation. If you want to trade a consolidation range, then albeit you might be able to pull a couple of pips out, but obviously we're going to be trading momentum, and US dollar Japanese yen, you will know it's quite stagnant. So there again, it's entirely your choice. Have a great day and trade serenely.